Hi friends, good evening. Welcome to my YouTube channel Smart Trading House. Today we will continue the financial planning part. If you did not see my first part of the financial planning, then I'll put the link in this video. You can watch it later. This is the continuation of the first video for retirement or retirement and financial planning. In the first part, we have discussed about the expenses as on today and what is the purpose required at the time of retirement, and up to fulfill our life period, means we have considered near about 30 years, 32 years, 30 years after retirement. Then up to that 30 years, what will be our monthly expenses will be there. Accordingly, we have to save our corpus from now, so that at the time of retirement we can use that corpus to get it the monthly returns. For that also we have to take 2-3 types for monthly returns. One is we have to put in debt return, debt fund. Second is in equity. Okay, here in the first part, just I am reviewing something we have discussed. For suppose my age is now 30 years and my monthly expenses is 20,000 per month. If I will retire at the age of 58, we can put it as 60 also. Then what will be the purpose required for retirement? What is the monthly expenses at the time of requirement? And my life validity, if I will take it, just an example, if I will take it after retirement, it is 30 years, means up to 90 years. Because I will retire at 60 and after retirement, my life expectation up to 90, means up to next 30 years I will for that 30 years I will see to get monthly income. So for the retirement purpose, we taking the monthly return 10% and 12%. We have considered how much we have to invest. So if we will go with suppose my age is on 30 and my monthly expense is 20,000, then during after retirement the expenses will go to 1,14,870. Today's 20,000, taking the inflation of 6%, it becomes to 1,14,870. So to get 1,14,870 per month, what is the purpose we have to consider at that time? What is the purpose it will require at that time, so that purpose we can use in we cannot use in FD, because bank FD it is going to near about 4%, 5%, 6%. It will not beat the inflation. So we have to go with some debt and equity funds. In debt we can consider for PPF if it is continuing. If not, then we can go ahead with some government schemes are there. I will explain later. Which is giving for 15 lakh, up to 15 lakh we can deposit in government schemes after retirement. And another scheme is for government employees is there also. Not only government employees, the employees who is doing the work after retirement, within 2 to 3 months we can deposit in that scheme also. Senior citizen savings scheme, in that scheme also we can deposit up to 15 lakh, and that one will continue for 5 years. And Prime Minister's Vaya Bhava Yojana, that is one scheme is there, where we can invest also up to 15 lakh, and there we can get also up to 10 years the monthly interest. So that interest are also very good, near about 7.4% per annum, and it can be paid monthly. So seeing why we are going ahead with the debt and equity both? Because if you will go with the debt and equity, then only we can beat the inflation of 6%. If you will go with the debt is okay, our principal amount will be secured, but we will not get much interest. Only 7.4% interest, inflation will go 6%. That's why only we will get 1.4%. So year on year, the fund amount will not increase accordingly. Yeah, means we will not beat the inflation. We will get the interest 7.4%. But some amount we have to put in equity also. That's why our fund will be remain same or will increase time to time, and it will continue up to near about up to next 30 years. Okay. So just we will see first the debt schemes after retirement. What is the debt schemes, that is guaranteed return debt schemes from Government of India, that one we can use. First one, if you will see for this Pradhan Mantri Vaya Vandana Yojana, PMVVY. That one now it is valid up to near about available sale up to March 23. In this Yojana, we can deposit up to 15 lakh, maximum up to 15 lakh per person, and this policy term is up to near about 10 years only. So for next 10 years after retirement, we can deposit 15 lakh and we can get 7.4% interest per annum paid monthly. Okay. So for this eligibility, what is there? It is already given in the website. You can check anywhere in Google. If you will you can search, we can get the details. Maximum up to 15 lakh only you can deposit, and maximum up to 10 years the scheme validity. Rate of return, if you will see here, PMBBY scheme provides subscribers with an assured return at the rate of 7% to 9% for 10 years. Okay. Maturity benefit, the entire amount including final pension and the purchase price would be paid. Means whatever the purchase price means 15 lakh, suppose we have deposited, that 15 lakh we will get after maturity, means after 10 years. And within 10 years we will get 7.4% interest, annually returns paid monthly. Means whatever the amount will come annually, that will be divided into monthly. Suppose we will go with suppose we will deposit 15 lakh. Okay, return is 7.4%. then what will be the amount will come? That is 1,11,000 per year. If we divide it monthly, that will come near about 9,250. Okay, it may be differ some rupees, but it will come just 9,250 monthly. Means this will be assured pension for us for next 10 years. So we can deposit here for 15 lakh. And another scheme is there also for senior citizens. If you go with senior citizens savings scheme, in this scheme also we can deposit maximum up to 15 lakh, and it will continue for 5 years. Okay, so but for this it is some criteria is there. Means we have to start this scheme within a limited time after retirement, when you are getting the gratuity and PPF and pension funds from the employer, and within the limited time we have to deposit. Okay, and we can start this scheme also in the authorized banks and in post office. So this is two schemes is there where we can invest after retirement. This is only after retirement because the minimum age requirements also is there for 60 years. So after requirement only, after retirement and after 60 years only, it will, these schemes will be allowed to invest. So we can go ahead with these ones if employer someone is an employee and after retirement he can go ahead with both schemes, and ordinary man also can go ahead with one scheme. Okay, so from here we can get 9,000 per month. Okay, then balance we can invest in equity. Equity we should not go ahead with direct total equity funds. We have to go with hybrid funds. Yeah, means you cannot go ahead with aggressive hybrid also. You should go ahead with conservative hybrid. Yeah, aggressive hybrid if seeing the risk factors, what is the at that time, what is our risk and how we can manage our risk, and what is our corpus, means what is the amount with us. Accordingly we can decide which fund we can select, but maximum we can proceed with hybrid fund and debt fund. Okay, in debt fund we will get maximum 8%, 7 to 8% return. In hybrid fund we can get near about 14 to 15% interest return also. So in hybrid fund we can go with aggressive hybrid, and conservative hybrid. That's depend upon that depend upon the risk factor of the person. Suppose I have near about the requirement, or suppose as per our calculation the requirement corpus is 1 crore 14 lakh. Suppose I have 2 crore, 3 crore, 5 crore amount of money with me at the time of retirement, then I can go ahead with 15 lakh only with one that government scheme, and balance we can put in hybrid fund and debt fund. So in that case we can put 50, suppose in 50% in debt, first 15 lakh is gone, balance we can put in 50% in debt and 50% hybrid. From 50% aggressive hybrid we can go ahead with 28% and conservative hybrid also 28%. That depend upon how at that time what is our capacity to taking risk, that depends, and what is the liabilities are there, because some persons during after retirements also liabilities are there. For some persons there is no liabilities after retirement. That's depend situation, seeing the situation person to person it will be vary. Okay, this is one thing after retirement how we can divide our corpus and we can proceed. And second one also for debt we can go ahead for debt, first debt we can go ahead with PPF also, because suppose we are continuing the PPF and after 15 years we can extend for next 5 years also, and annually that next 5 years we can withdraw annually partly payments also. That can help us because PPF also giving near about 7+% interest per year. So we can use PPF at that time for next 5 years. Okay, this is one thing for after retirement. Okay, after retirement how we'll manage our funds. And during this period, means during our working period to wealth creation, means to get the corpus amount, to accumulate the corpus amount at the time of retirement. Now we can go ahead with equity funds and debt and gold. I have already mentioned in my earlier video. So in debt fund we can go ahead with the PPF, bonds, FD, NSC. NSC we cannot, NSC means post office national savings certificate, and Kisan Vikas. That one totally debt, with it is guaranteed return. And balance in gold or real estate we can put, but the actual we will get the return in equity market only when you will invest in equity. In equity you can proceed with the mutual fund and stocks. Okay, who suppose some person says the good knowledge in stocks, some knowledge of equity markets, they can proceed with equity market direct investment in stocks, but it is not recommended for all, because investing in equity market direct on stock, you have to manage your fund directly, so it is risky. If you don't have the knowledge, we should not go with direct investing in stock. We should go with mutual fund, because in mutual fund we are paying the amount in SIP, a lump sum amount, and our fund is managed by a fund manager in that mutual fund. So they are managing and they are investing in the equity market, debt market accordingly, and the risk is not directly handled by us. It is means the fund is not directly handled by us, that is handled by the professionals. That's why mutual fund for general persons, general public, we can proceed with mutual funds. For the mutual fund, we have there is some service charges also, expense ratio yearly, that one we have to pay, because that mutual fund houses also running with staffs and overheads are there. That one they has to take only from us only. In mutual fund we can proceed with 2-3 type funds, means large cap funds, mid cap funds, small cap fund and multi cap funds. Maximum to maximum 3-4 types fund it is okay for a general person, not required more much more than. Suppose in large cap, how much we have to invest, because now suppose a person now at the age of 30, then how much he can invest in large cap, and how much he can, what is the percentage he can in large cap, what is the percentage he can in mid cap and small cap and multi cap. That is depends upon the age and risk taking capacity of that person, because we cannot say it is a general. As a general, if you will calculate the debt to equity ratio, that is 100 minus age. Okay, suppose my age is 30, then I will proceed with 70% of my monthly investment in equity and balance 40% in debt, and my balance 30% debt. It is a general formula, but we should not go with general formula, because it depends upon person to person, that risk taking capacity and liabilities, what is the liabilities with him, that depends. So then suppose I have to invest, suppose I have to invest 30,000 per month. Okay, 30,000 per month for a general, as per my view, just I am explaining. As per seeing my risk taking capacity, I can go ahead with suppose 5 to 10%, suppose in small cap. Okay, and mid cap we can go ahead with 20 to 25%, or we can go with 30%. Okay, then large cap we can go with 30%, and multi cap we can go with 40%. Okay, here we can change also, means seeing the risk taking capacity, because small cap is high risk, mid cap also high risk but lesser than the small cap, and large cap is low risk, and multi cap also risk is there but low risk, because multi cap funds, multi cap means that is flexi, today they are saying flexi funds. Okay, flexi cap funds. Okay, flexi cap funds, the mutual fund manager have the rights to invest in different sectors, but there is some also capping is there, how much they have to invest in large cap, how much they have to invest in mid cap, and how much they have to invest in small cap. Okay, So next time, today I think the video will be long if we will proceed now for all the discussion for seeing the mutual funds, which mutual funds we have to consider for large cap, which mutual fund we have to consider for mid cap. So this video will be long, that's why today sorry, we will close this video for today, and in the next video we will discuss on the funds, which funds we can edge on today, which funds is good, and how to check the mutual funds in the website as your own. You can also study the mutual funds, what is the points we have to consider during investment, starting any investment in mutual funds. Okay. Yes friends, thank you for watching this video totally for educational purpose only. There is no recommendations, and before doing any investment you have to consider, you have to take advice from your consultant, advisor, mutual fund advisor, tax consultant. So I am not a SEBI registered advisor, that's why this video I am recording only for education purpose, because so many peoples, so many persons in this world, in India, they don't know about mutual funds, and then they don't know about the schemes which are running now. They don't know about the how to calculate the amount as per today's expenses. So this is totally as per general knowledge, so that everybody can assess their expenses from today, so that they can achieve the required purpose by starting investing from today, and they can stay after retirement a very good and pleasant life. Okay, so this is for today. Please like my channel, subscribe to my channel, share this video, and comment. Please give comments. I did not receive any comments from any of the friends. That's why I request you to please give comments. If there is any question also, you can send questions so that I can clear it. I can clear it in comments, or I will take it on in the next video. Thank you. Bye bye. Good night.